Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, folks, let's get underway here. Markets are floating just slightly lower across the board. You have Apple reversing today a little bit to the upside, is up about $10.50. Again, after dropping as much as it has, I'm not surprised to see a little bit of a bounce there. Ultimately, I still think Apple's headed down to about the 420-ish level. But again, in a technical sense, obviously short term it's been punished. It's getting a little bit of money coming in on this Monday. We're continuing to see the average investor pile back in the market, and again, that in my opinion is what's keeping the market up on the extremely light volume. I think what's not allowing it to go higher is the institutional unloading. So again, institutions are utilizing the inflows from the retail investor to kind of push and sell their shares, and that's kind of keeping the market in this limbo sideways motion. The 150 level I gave 2 weeks ago as a major level of resistance, and look at how well it's worked out. Here's a pivot high at 150, 150, 150, 150, 150, 150 again. That's exactly where we're trading. And again, that level has been an extremely great level in terms of resistance on this market. A couple other things to go over. The other thing I want to just mention here, folks, is that we continue to kind of see that belief that the economy is getting better. Everything seems good again, and again, that's coaxing the average investor in. Like nightly news on Friday, after the S&P closed above 1500, number one story, the markets and the retail investor getting back in the market. So again, that just has to tell you, that has to be a little bit of an alert here short term. In addition, so far in January, it is the best beginning to a new year since 1989. All right? That's got to be a little troublesome too, in my opinion. That's got to be very, very troublesome. All right. And again, if you look at your daily chart of the SPY, take a look at this. And first of all, I have a trend line here that you're kind of tracking. This is actually a very important trend line connected here from 2011 highs to 2012 highs. You're just underneath it. So I actually think we could go up and touch that line. But either way, I mean, that is resistance there. Short term, look at the market's run since really mid-November, straight up, except for this one little dip on the fiscal cliff worries. And again, notice how the trend has just continued. So you had this angle going, you continued it after this one little dip, and you continue to hold up there. Again, in my opinion, between 150 and 152 short term, that'll be a market top, and you'll see a pullback. Then whether or not it continues is up in the air. I mean, we'll find that out, obviously, but that is what I'm seeing right now in the charts. Looking across the board, taking a look at JP Morgan Chase, under pressure today. JPM is down 41 cents. Not a huge drop by any stretch. Really, there's not a lot that's down big today. You have Baidu actually having a great day, BIDU. Apple's having a solid day, up 10 points. And then everything else is kind of neutral to slightly negative. The one stock seeing a little bit more pressure to the downside today is Amazon. Amazon reports earnings tomorrow after the close. So, in my opinion, what you're seeing, this thing has had a monstrous run up. Again, it just basically hit all-time highs on Friday. So you're seeing institutional investors taking profits. Your smart money's taking profits. The reason being is because, again, anytime you have such a major move up in a stock going into earnings, oftentimes it's factoring in that great move. And again, I think that's what's going on here. You have institutional money unloading on Amazon, and it is down about $7. Nice reversal candle there. Not engulfing, but a nice reversal candle, technically speaking. All right. Chevron's flat on the day. Exxon's down about 50 cents. Research in Motion getting hammered today, down a buck 41. Again, that thing has had such a dramatic move up as well. Not surprising to see a little bit of a drop on that. Let's just jump back to the SPY and just take a quick look. Spiders, again, I'm running into resistance at the 150-ish area. And, we'll see again how things play out. But bottom line is, the proprietary PPT strategies continue to just give us every single move in this market. Again, weeks ago, I said the market was going to 150. That's where you'd see it. And sure enough, here we find ourselves hammering on it for the last 3-4 trading days. Amazing to kind of see this type of movement and how accurate this analysis can be. And again, I'm not taking credit for it myself. Personally, I came up with the methodology, but it's the methodology. At this point, I just follow the methodology, and it tells me exactly what to go and where to go and how to trade it, and ultimately gives me profits in the terms of 80 to 90% success rate. Come to InTheMoneyStocks.com, take the 7-day free trial, profit with the pros, profit all the way around. I know it's just continuing to make me money, and I'd love to teach every investor in the world how to just profit like this. Stop getting screwed by the institutions, folks. Profit with the pros. See you here at InTheMoneyStocks.com.